Well, good day, all. Ira Epstein, here we are with your financial market wrap-up, and this wrap-up is for the evening of Friday, the 12th of January, 2024. Big storm in the Midwest. We're going to freeze. It will impact energy prices and the like. Today in the heating oil, you had gotten up to $2.78. You realize you fell 12 cents? People don't realize how wild the swings were in the energy market today. They were everywhere. You got up to $80.74. You backed off from that, down almost $3. Ended up still 88 cents higher, but understand where you're at. And natural gas, paying attention to the freezing weather. And in big parts of the Midwest, you will be sub-zero for nights on end, 3, 4, 5. And you're going to see temperatures under freezing as highs during the day, and with wind chills going to be very cold. You don't need to be a hero. I think this market wasn't right in pulling back that way. I think there'll be more of a bid in there. We saw the PI number today. Very strong number, a very impressive number. And I am the guy that's been saying I'm not impressed with these numbers so far. So let's ring one up. I mean that. Ring that one up, that's the first time now you got my attention. Is it going to work itself into the PCE and the Fed really looks at the PCE? Well, that will be the thing. It's about 2 weeks down the road, so we want to see where that's going to fit in. And remember, one report doesn't set the tone. You've got to get several of them. So you just had labor, all the jobs report a week ago. Now you had CPI, PPI. You're going to get all of these reports 2 more times before the March FOMC meeting. Expect nothing out of the January meeting, January 31st. The Fed will sit tight and just allude to all this, and we'll see where they're at. But there'll be an argument in the notes, most likely, about the runoff of the balance sheet, so that you do have to pay attention to. The United States and the UK attacked, as you know, in retaliation. They didn't just go looking for a fight. The Houthis, as I understand, it was 73 different strikes that we made, 12 or so different areas by air and by submarine launching of missiles in there. And the word here is, if you're going to attack, and by the way, the Houthis immediately launched another missile today, right afterwards to show we're not done with you guys. Well, what the Houthis have done is they have shut down world traffic in parts of the Red Sea. Volvo today and Tesla saying that they are going to shut down some plants. Tesla for 2 weeks. I don't know the amount of time yet that Volvo is going to. They can't get their parts there, so their backups are happening already, the supply chains. You just can't allow that. So if this means that you're going to have something blow up in the Mideast, so be it. So be it. I'm a hawk. So be it. Just go out and get them. Let them know that if you do this, there's heck to pay. It's not tit for tat. It's lots of strikes for your intrusion. Stop, we stop. Nobody wants to invade Yemen, but take out all these areas. I would think with all the money we have and satellites and everything else that we have, we know where pretty much everything is. Take it all out. Be surgical. Let's see those millions we've all spent, what they can do. Submarines, I loved it. Didn't even think we were going to use a sub on this. All right. Now, remember, come Tuesday, because you got Martin Luther King Day, I want you to join me in the afternoon. At 12:15 p.m., I'm opening my webinar. I start speaking at 12:30 p.m. Central Time. If you haven't got an invite and you want to join, it's a Zoom meeting. You move your cursor to the top up here. There'll be an icon. Click it, fill out the form. You will get back from us the link, the user ID, the password that you need. And there's another link in there if you have questions you want to ask of me. I wish I could say call my staff, but we're not going to be around until Tuesday. Martin Luther King Day, my staff will be working remotely. Some will pick it up on Monday. Over the weekend, I doubt you're going to get anybody to pick this up. But I've given you ample notice. We're getting a lot of questions. Ask them now. Don't wait to ask me on spiders, ETFs, and things. There's thousands of them. I can prepare all the futures charts. I have them ready to go. I don't have all the stocks, ETFs, and the variants. And boy, people are asking questions of some stocks I've never followed. So I'll prepare all those charts. All righty. So let's take a look at what we have. In the S&P, we were down for the week 0.7%, so basically an unchanged time. The market's equal to just about the all-time high close. When you look here, you can see how the market's had a couple of weeks of distribution, and that's what this is. You keep hitting the same high zone, and you're back and forth filling in right there. The pattern is bullish. So, first thing, unless the market decides to take out 4702, the bullish pattern is one of higher lows and certainly higher highs. Next, the support's far away in the market. It's back at the 18-week average of closes at 45.13, and the resistance is just above you here at 49.14. Now, there's a point at which you're going to say to yourself, how high can the market go now? Well, here's how high it can go. Nobody said it has to peak out just yet. You know, the market's frothing. That's the right word I want to use, frothing. Anything that looks like they're going to get the Fed to cut interest rates is going to get this market saying, why can't I go to the 5,200 level, as so many analysts are predicting in the S&P, and why do I have to wait for later? That's what you're going to be fighting. In terms of momentum, as long as you have this bullish embedded reading where the red and the blue lines, they're called the K and the D, are going sideways over 80 until the red closes under 79, I contend the pros will buy the breaks. If you've taken my enhanced Bollinger Band course, go to iraepstein.com, the word education, that's where you can take the course. It shows you how to come in on these breaks. There's a very certain way to do it, where you come in, the exit point, and what you'd be looking for on them, but that is still in the buy mode. You're not quite there in a different way in the Dow. The Dow is still a vertical price rise. It is embedded. That just is bullish in that sense, but it doesn't have the higher highs, higher lows. I happen to like the S&P then a little better, and I like the NASDAQ still. Now, I know everybody's going to say, you know, I'm going to rotate those Magnificent Seven. We don't need them. We're going to buy other things. Folks, there's a reason they're magnificent. Are you looking at the price of what Microsoft has done? I told you that's one of my favorite stocks if you watch the Spider ETF. Became the most valuable company, period, today. So keeps getting in fighting battles with Apple. Apple, I fear, didn't have a good Christmas. Who needs another iPhone? They need a product. They need to get new, fun products out there, and they don't have them right now. It's the same iPhone, the same look, the same whatever. Listen, I'm not the creative guy, but you want something new, revolutionary. Remember when we all stood in lines to get rid of our Motorola flip phones and get the smartphones? Well, we need another thing. When I looked at what the market's doing in the NASDAQ, embedded, again, I think the market will be bought until you lose the embedded reading, not in the Russell. In the Russell, you're overbought, you got up to where you want. You could easily fall back into this zone of 1891 to 1842 looking for support. And no, I didn't say I'm bearish. You still have higher lows, higher highs, but it's not where the play is in the market. When we come to the 5-year notes, this is the one. If you want to buy one, this is the one you're buying. It's got the embedded reading on the daily. You don't have it quite on the weekly. If you count with me, I don't think you do. Week 1 of embedding. Week 2, now you need one more. Don't have it. Just what I suspected. So not quite there. So I'd be waiting on it. And I think that's the friendliest of the group. Same thing here. You're waiting for the embedding, but they're all in the bull camp, even the bonds. And I don't see any major news coming out this coming week. You have a 4-day week coming up at you that's going to upset the apple cart. It could be technical action, but I don't see anything there. In the dollar, I'm still of the opinion we have a bear mode here. And I'm watching very carefully for a crossover where the 18-week gets underneath the 100. Could be right in front of us this coming week. So keep your eye on that. If you get good rallies, this is a big resistance zone in the short term. So I'd be looking at that. In the eurocurrency, I'm still in the bull camp, but too overbought for me to say to my clients, hey, deploy some money and get into that market. You got higher highs, higher lows, and you've hit some upside targets. Same thing in the Canadian dollar. You're overbought. Overbought doesn't tell me to deploy or tell my clients to deploy new funds in the market. Both words are important there. You lost the embedded reading. You had your one heck of a rally, which is typically what happens. And now the market's trying to tell us what's the next story going to be. In the end, as I've told you, especially when you look at the weekly chart, the market has done the Bank of Japan's work for it. It has priced in that they're going to leave that easy monetary policy. When, how, no one knows. It's happened just the way it happened in November and December, as with our Treasury offering so much in the way of auctions and driving interest rates at first higher and higher, and then they started breaking down. The markets do the central bank's action. It's done it. Support coming in the end for a big test here at the 6840s. Let's see what it looks like there. In Bitcoin, you got up to the spot where I think the pros are taking money off the table. If you looked at the daily chart and you saw that the market kept hitting the 48,000 level over and over, game over as far as I was concerned. And yes, I had a concept trade on, as I call it, for my paid subscribers in the morning. They were in the market from the 38,000 level. And yesterday I pulled the plug and said, you got to be out. Just call it a day. You did phenomenal if you took the trade. And the concept part was the ETFs were going to happen because the SEC had lost a case. I couldn't imagine why they wouldn't release. They hate the idea of these ETFs, which means, let me share this with you, when you get a regulatory body that hates something, they're going to be all over these different ETFs to make sure that the letter of the law isn't broken in any manner. And I mean in any manner. Remember, I come from a futures background for 54 years. You think I didn't see when the regulators took control of this industry and changed the whole thing? And you learn that that's what they're doing. They don't like that they had to do this. They don't like the product. That's very evident. And if they're going to like the product with smiles, it's going to be the kind of product they want in terms of regulation. So just be aware of that and be ready for fines about 6 months to a year from now. That's been the mode that I saw from the CFTC, and it's probably the mode from the SEC. And you go in with the firms that they're not all going to be strong firms. You don't need 11 ETFs doing the identical same thing. So some will do things to make their business, and I saw it in futures. Why wouldn't it happen in the beginning of this business? So things you watch. That's just experience. Doesn't mean I'm right, but that's what my experience showed me. When I take a look at what the market is, you're over the 18-week average on the differential of WTI to our crude, from the Brent to our crude, the WTI, and it should hold a premium because that's where the missiles are flying, right? That's where everything's going. The market has made a stand, right or wrong, at the 200-week average of closes. It is an oversold market. The weekly chart has not turned up with all this going on. You still have to get back up over here. The last rally high you had in the market, we can take a look at it, was 81.71. You need to take that out to get a pattern of higher highs, higher lows. Let me scare you. If you take out the lows of last week, 74, 79, you absolutely open the door to make a run for the lower Bollinger Band back to the 71 level, let's call it. So be aware of that. When we take a look at heating oil, the market was up 600 points, 2.3%. So that's not bad action for the week. The last rally high right here was 276.85. So as I see it, I should have had blue arrows pointing up here. I just noticed that. I'm wrong. You're still embedded. You want to lose that by getting the red line over 21. It could happen lickety-split come Monday. Remember, we do have limited trading in a number of markets starting Sunday night to noon on Monday. And then at 5 p.m., we open for the Tuesday trade again. And it's complicated because they're going to roll in the Monday trade off and they'll roll it into the Tuesday pricing. So it gets confusing. You should talk to your broker about it. I don't want to be here teaching that. But that's what I'll be looking to see what it does. Does it lose the embedded reading to make a run at wherever the 18-week average is, or does it get back under here, 250.75, and just say, we can't stay up? Whoa, that would be a surprise for the market. So you put it together, you try to figure out what do you want to do. I want to see you come Tuesday. We'd have a lot of fun for 20 minutes. Move your cursor up here, give it a click. Remember, I don't post my video of this. I have one. I record the whole thing, but I don't post it. I want you to attend. So please do so. I'll see you Tuesday, I hope. You can ask questions even live during the webinar. It's 20 minutes long. It flies like that. You take care.